to just walk in and sit down at the back of the room. You have to make a genuine effort to try and participate. Right. And you have to send them the Zoom or the Teams details. So it's not very good for democracy.
Okay.
And that's the reason the government are giving. I don't think it's legislation. I think it's pressure in any particular direction, other than it's been proven to be very cosy and comfortable for local authorities to run the way they have.
Good morning, everyone. Could I just mention that the webcast is now live?
Right, better watch what I'm saying then.
Morning, Mike.
Morning, Mike.
Morning, Melanie.
I'm just waiting for Philip, Mike.
I'm, well...
We are, yeah.
Philip Pearson is here.
Yeah, okay.
Good morning, Mel.
Morning. It's Philip Atkins. We're waiting for the chair, Philip.
Right.
So, yeah.
I wondered, I'm just scanning my list of attendees for Philip's, and yeah.
Tim's got a tie on today.
To be honest, it was more to see if I could remember how to put it on. I thought I'd test it. One day we'll be back in the office, Mel, and having these meetings in person, hopefully.
Yeah, I mean, I suppose that could be as early as the June committee, couldn't it?
Possibly, yeah, because around the 12th at the...
Well, the 21st, isn't it? So we're the 26th? 25th?
Yes, it could happen.
Could be the first one back, yeah.
Good morning, everyone. I got in briefly earlier, heard you chatting, and then Teams threw me out again.
I must admit, I've been having trouble the last couple of days with it in and out. So I've got my cellular and my internet connection on. I'm hedging my bets at the moment with it. So if I disappear, I don't know how I'm coming back, but yeah. Are we core at Mike as well? We got Colin, Mike and Derek, so we core at, aren't we? So we could start.
Yes, we have 3 members, which is sufficient.
Melanie, I've texted Philip Atkins just to say that we're waiting.
Okay.
Do you want me to make a start if we're live and ready to go?
I'm happy if somebody wants to take the chair in Philip's absence. So.
Well, I have done it before. Are members happy that I chair it?
Yeah, happy with that, Colin. Morning.
Okay. Right, welcome everybody, and we'll start with item 1, which is apologies.
I have a possible apology from Stephen Sweeney. He has other commitments this morning, but he will try and join us later if he's able.
Okay, thank you.
And so can I just add at that point that Ian and myself have another committee that we need to attend at 10:30, so we'll need to be sort of coming off the call then, but obviously Philip Pearson's leading the meeting today from Hyman's. But Ian and I will have to disappear about 10:15 at an appropriate time.
Okay, thanks for letting us know.
And also Alistair Little has given his apologies for today's meeting as chair of the Pensions Committee.
Okay. Thank you. We'll go to item 2, which is declarations of interest. Are there any declarations to record? Take that as a no. Minutes of the meeting 1st of December 2020. Any comments on those? I'll take those as read. Thank you.
Yeah.
And there are no matters arising either, Chair.
Okay. We'll go to item 4, which is the fund performance as at the 31st of December.
Thank you, Chair. I'll take this one. This is agenda item number 4 and shows the performance for the December quarter and the previous 2 quarters to that. December quarter showed 6.8% return for the fund. December was, I suppose, a better news quarter. There were certain things which encouraged, particularly equity markets, encouraging vaccine developments as the medical regulators approved certain vaccines. There was the election win of Joe Biden in the US and subsequent stimulus packages. And in the UK, of course, there was some finality to Brexit, although I'm sure it will rumble on a little bit longer. Also, the ECB approved a pandemic relief package, all which aided the markets, gave them confidence, and there was an increase, particularly in equities, like I said. All this contributed to the fund having a valuation of 5.9 billion at December 2020, and the full holdings investment is attached at appendix number 1 for information, and we are happy to take any questions on anything related to this agenda item.
That's very good reading, isn't it? Performance is good per quarter all the way through on the first page.
Yes, I suppose there was a low starting point. I suppose the financial year to date, as obviously the 1st of April, was quite a low starting point for the fund, so that 23.5% is not misleading, but obviously it had the benefit of this low starting point.
Yeah. And the long-term numbers are solid as well, over 3, 5 and 10 years period. And I suppose the bit to highlight is the annualised return over 10 years is 9% per annum, far more than our actuary assumptions and our liabilities.
Yeah, all good stuff. Mr. Sutherland.
Thank you, Chair. Yeah, I just endorse 5.9 billion, 6.8% return in that quarter. Fantastic. The only question I've got really was about property. We know that's been bumpy last year, and there was talk about a proper property revaluation. What's any update or any comment on that?
We've got obviously the property managers coming to the meeting later today anyway. I think what we saw in the first couple of quarters, sort of March and June, were that the valuations given by the independent valuer had got the material uncertainty clause around them. I think by December that had been lifted. There were sufficient property transactions that had happened in the commercial property market throughout September and December quarters to actually give that more certainty around the valuations. I think when you look at the actual numbers in the of the property in the portfolio, they have been fairly consistent since March. So we haven't seen those big falls that I think we were probably anticipating, but clearly that material uncertainty could come back again, albeit it's not there at the moment. So I think at the minute, property's been fairly consistent in terms of the valuations. I don't know whether Hymans or Caroline have got any sort of comments on that, really.
And well, so the property managers, I'm seeing the uncertainty clauses have by and large all gone, and there has been a slow uptick in interest and level of transactions, but there's still a lot of rebalancing of demand and supply to happen in certain areas, and it's unclear exactly what's going to happen to not just the sort of obvious retail sites, but also longer term in the office market. So a fair amount of uncertainty, but the actual uncertainty clauses have gone everywhere, and there is a reasonable amount of transactions going on in the businesses.
Thank you for that, Caroline, because I'm a bit with you. I thought that was probably overstated in the report in terms of reality going forward. But nonetheless, don't want to take anything. I think a great quarter for us. So thank you, Chair. That was all I really wanted to cover.
Okay. Any other comments on item 4? Now we'll go on to item 5, which is responsible investment report for the quarter 4.
Thank you, Chair. I'll pick this one up. So this is our standard quarterly report that we have now put in the public domain around responsible investment. Some of you will have obviously received letters from Friends of the Earth in the last sort of week to 10 days around the fossil fuel, which we've obviously got a response that we've provided to those that have asked for it. I think what I would say about the whole sort of climate agenda is that since we met last time, we've received our climate risk report from LGPS Central, and LGPS Central will be coming to Pensions Committee at the end of March to present the findings to the whole committee around that report. So our sort of carbon footprint, our fossil fuel allocations, etc. There's a lot of information and interesting stuff in there. I think it's fair to say that I'm saying this is a crossroads. So the fund is at a crossroads in its investment strategy life at the moment. And I think we've got a golden opportunity here to take stock of our strategy and also to think about where we need to be going forward to incorporate that climate strategy into our thought process. And also we've got the social and the governance aspects to bring in there as well. So I think a really good time for us just to take stock. What does it look like? What do we want to do in terms of climate strategy going forward? One of the things that we're going to have to start to do is the task force for climate related financial disclosures. We're going to have to start reporting on that anyway. And we've also received a draft report from Central about what that might look and feel like for us. So again, something we start to do. We've got the UK Stewardship Code that needs to be updated this year. And that's something we've got to think about, how we demonstrate our activities in this area. And as part of doing that, we probably need to revisit our investment beliefs and sort of make sure they're still fit for purpose in that journey that we're going to start to take along the sort of the responsible investment and the climate strategy road. If I can just bring your attention, I suppose, on page 26, paragraph 8, we've included there some of the engagements that our investment managers have done with various companies. And I think you can see that we've pulled a few out, but really the environment has been the key focus, and I think it will continue to be so for a while. But as I say, it's important not to forget the social and the governance elements of that too. We append at Appendix 2 and paragraph 9, LAP's quarterly engagement report, and that's on page 31. Again, lots of things that LAP are doing in there, and we'll just come on to that in a bit more detail. We usually append the LGPS Central Limited Quarterly Stewardship Report. We don't have a Q4 report, unfortunately, as what Central are proposing to do is combine the Q4 reporting into their annual report, and that will be delivered as at the 31st of December. And that will probably be available for the June meeting, although it will be sort of available sooner than that. It won't physically be brought to the meeting before then. The annual report obviously will demonstrate LGPS Central's ability to adhere to the UK Stewardship Code. It's a bit more onerous than the old code was. And obviously that will also help us as a fund to demonstrate our ability to sign up to that code as well. Finally, in paragraph 11, we have the voting activity in the quarter. And I think, it's just sort of, yes, Legal and General have got a passive fund, but I think they've got a lot of shares, but that's obviously reflective in the amount of votes that they do and the size of that sort of engagement operation that they have. So I think pleased to see that we are voting with companies in the various resolutions. Page 31, as I said, is the LAP quarterly engagement report. And again, I think the whole report demonstrates the sort of the engagement and how working together with other investors across the LGPS and across various sectors can actually start to make a difference. There is a table on page 40, and as I say, I've mentioned the fact that a lot of engagement, a lot of talk at the moment around climate change. But I think the table at the top of page 40 demonstrates that there's a lot of conversations that go on about other things, and it's quite reassuring, I think, to see that the majority of the engagement topics that LAP have done have been around human rights. So that's quite reassuring. Say climate change is up there, but we haven't forgotten the other sort of elements of our RI commitments. And that's all I wanted to say really on that this time. If anybody's got any questions, happy to take them.
Yeah, if I can start with a question. I appreciate what you've said in terms of we normally rely on a quarter report from LGPS Central, and we're looking at how we change our formatting of reporting. It just occurs to me that we want to try and, wherever possible, minimise duplication of effort. And I've always thought it's been a good strength of LGPS Central that they do this on behalf of 8 partner organisations. So whilst we might want to look at changing our formatting to incorporate more climate change, is it more the matter of trying to encourage LGPS to go in the direction we would want to go in terms of reporting?
I think they're already there, to be honest. I think LGPS Central are sort of taking the lead on this one. There are some partner funds across LGPS Central have worked with them a bit ahead of us. So I think, we've got the benefit of learning from the reporting and the requirements of other funds. So I don't think there'll be anything that we will need that they don't already offer. So it's just a matter of us just rethinking, I suppose, our climate strategy is personal to us, or it will be. But we've also got to be mindful that, we need to be aligned with the other funds in LGPS Central. If we go off and do something that's a little bit different, then that makes it more challenging for us and them. Whereas, 8 partner funds speaking with one voice and one direction of travel should be the right direction of travel for all of us. So I don't expect us to be out on a limb or doing anything different, either in reporting or in strategy terms to that extent either.
Okay. And I suppose there's the same similarly in responding to lobbying, because you get the occasional lobby campaign coming through either by email or somebody contacting us by phone. And obviously there's quite specific, those sort of questions. They want to know what we're doing in this country, this sort of investment. And that involves quite a bit of research to know which of our finance companies have got that exposure. Is that something we'll probably get better at through coordination with LAPF and LGPS?
Yeah, I think it is. I mean, it's a resource that needs to grow. And I think we recognise that it'd be nice to have individual resources at a fund level, but clearly we're harnessing LGPS Central. I think we're also asking LGPS Central to look for a tool that will help us to do that analysis ourselves at base. So we don't have to keep asking them to do it for us. And understand really, the impact of different investment decisions on our portfolio as well. So, I think there's a big piece of work around the whole responsible investment and working with Central to do that. And again, LAPF were out there this week. We've done our own response quite quickly to the fossil fuel question, but LAPF were there as well with a draft response to help us. So, I think that collaboration does work and is proven to work.
Okay. Any other questions on this agenda item? No? Okay. We'll go on to item 6, which is the annual investment strategy for pension fund cash.
Thank you, Chair. Yes, I'll take this agenda item 6 again. So the annual investment strategy for cash is for just the pension fund cash, the 1% strategic asset allocation we have to cash. This is not a statutory document, but for a number of years the fund has sort of pulled out a separate AIS for cash, as we see it's good practice and gives a good framework around managing the cash. The annual investment strategy follows the same principles as the Statutory Accounting Council Treasury Management Strategy. This is in following the CITFA Code on Treasury Management and the MHCLG guidance on local government investments. The cash allocation is 1%, and it will always sit with the fund, not LGPS Central. So we'll always have this to manage. And the AIS sort of lays out sort of paragraph 7 that, a bit like the County Council's Treasury Management Strategy, the objectives for this cash is in the order of the CITFA Treasury Management Code: security, liquidity, yield. This is the sort of oil on the gears of the pension fund, paying the bills and paying the pensions. So following the MHCLG guidance on local government investments, we do break down the cash into sort of separate buckets, and there's standard investments. This is where the majority of the cash is held, and these are invested with the UK government. So this could be central government or local authorities. And due to local authorities having a bit of noise around their financial resilience in the last year or two, there is a limit on the amount we can place with individual local authorities. And we have used that market, although not so much recently with the interest rates coming down. There's also money market funds, which take the bulk of the cash investment. These are AAA rated, same day liquidity money market funds. And also the funds banking provider, which is Lloyds Bank. In terms of non-standard investments, these separate Standard investments are detailed at paragraph 16 onwards of the report. In terms of the non-standard investments, well, this I suppose could be everything else really. This applies more to sort of local authority investments who may keep their money different to a pension fund. But in terms of non-standard investments for the pension fund, all this involves is some slightly longer dated money market funds, which are 2 to 5 day liquidity and take a little bit more of not risk, but invest a little bit further on the yield curve to get a slightly higher return. That's all we're investing in the non-standard. Like I say, this is a fairly low risk strategy. It's about keeping the cash safe and readily available to use. And the list of counterparties that we do invest in is at Appendix 2. And happy to take, along with the time limit we invest for and the amount we can invest per counterparty. So for example, money market funds, we've put a limit of 30 million on there. I'm happy to take any questions on this strategy.
Michael Sutherland.
Thank you, Chair. Just really, Lloyds Bank are our bankers, so they have been for some time. Do we review the banking market to see if that's fit and proper for us at this moment in time?
Yeah, we have got we're preparing for a tender we're going to be doing that will go out later this year. So Lloyds, we've been our banking partner since 2014, and previous to that it was the Co-op Bank for many number of years. So the contract with Lloyds was for 5 years. So I think it started on the 1st of April 2015 and obviously ran until 31st of March 2020. We did look at the market before that. We were hoping to use a framework which would sort of speed up and make it more efficient, the appointment of a potentially new banking provider or reappoint Lloyds. Fortunately, there was no frameworks available. So we did get a exception to procurement regulations for a 2-year waiver. So this was up to 2022. In the hope that obviously a framework would become available that the fund could use. This isn't looking like it's going to happen. Well, I think we're pretty sure now that there will be no framework available to use. So we'll go out to full tender. So obviously we're preparing now to go out later this year. So to market to, so again, test the market to see if Lloyds are still the preferred provider.
Thanks for that, Tim. Thank you.
Okay, thanks, Tim. There's no other indications to speak. So can we go on to item 7, which is the investment strategy statement, the ISS?
Thank you, Chair. I'll take this one. Obviously, an annual review of your investment strategy statement is good practice, albeit the regulations do say we should review at least every 3 years. I think we've just always updated it for, minor amendments every year. Last year, it did tie in with a major update linked to the 2019 valuation. So the update today really just reflects some activity through 2020 and some changes to benchmarks that we're going to come on to a bit later, but we just included them here in the draft for completeness. I think the investment strategy statement has to have a number of things in it, but it is a useful document really to reference to. I look at it quite often, but obviously we're going to need to update this on the back of our responsible investment work around the beliefs and that are in there. We've also got MHCLG who are still looking to do a consultation on pooling, and that may happen in 2021. We don't know yet. So there will be updates required on that as well. I think,
Melanie, is that the original consultation they've been talking about for the last year?
yes, we had an update via a cross-pool meeting that MHCLG attended. There's been a set of questions that have gone back to MHCLG from sort of the LGPS community around the sort of things they think they should be asking, and that will obviously come back to us in forms of sort of a consultation questionnaire response. We understand they've got somebody else in now, I think, to look at that as well and help them. So I think we're thinking 2021 might be more likely for that.
They start a strategy and then never follow it through, but there we go.
I say we are supposed to consult on the document. I mean, as I say, it is minor changes. So we've taken consultation in this context to mean that the document has been put in the public domain, and Hymans have obviously been party to the papers. I'm sure if Hymans have got any comments on the document as it stands, that they'll let us have them today or sort of going forward before we sort of finally present it to committee at the end of the month.
We were fine with it, Mel, so no comments from our side.
Okay, thank you.
I'll just check for understanding what putting it in the public domain means.
Yeah, the papers are on the website, obviously, for this committee, so it's accessible to the public today, and it was last week. The other version is on the pension fund website, and again is fully accessible to the public through the pension fund website. So this draft version will be sort of put there from it becomes a final version when committee have approved it, and we'll put it on the website then from the 1st of April. But this is in the public domain now, so anybody can see the papers for today's meetings.
Do we get much reaction from publishing it that way?
Not really. As I say, it's probably a document that's more useful to sort of investment managers. But I think it's written in a way that it is easy to read for everybody, scheme members. And in the fossil fuel questions that we had, for example, we cited this document. So we use it in terms of sort of providing responses and indications to people where they can find out more about the pension fund and our investment strategy. So, as I say, a useful document to have really for us and for anybody that wants to know a bit more.
Yeah. Okay. That's it for item 7. Then we'll go to item 8, which is the dates of future meetings, with dates going through to 2022. Just for noting, which then brings us to item 9, exclusion of the public. Chairman to move the public be excluded from the meeting for the following items of business, which involve the likely disclosure of exempt information as defined in the paragraphs of Part 1 of Schedule 12A of the Local Government Act 1972 as amended, indicated below. So we'll go into Part 2. Do I need to pause, Mike, or is that it?
Yes, please, Chairman. If we can just pause for about 30 seconds whilst we end the webcast.